his, rather pathetic performance by saying that he had a lot of great stuff to say, but nobody could hear it because all the best stuff that he said, well, I had my finger on some mute button, and so nobody can hear him. And, of course, I don't have a mute button. It doesn't exist. I was trying to get the guy to talk. I kept asking him questions. The problem was he wouldn't answer them, at least, with anything relevant. See, the problem with Robert Wenzel wasn't that I wouldn't let him talk. It was that he had nothing to say. That was the real problem. And I would have let this subject die because quite frankly, I was kind of embarrassed for him based on, what he was saying. But since he's putting all this out there, accusing me of all this, and of course, if Robert Wenzel really thought that he didn't get enough time to express his opinions, I would have kept him on. And he could have called me up. I would have had him on again today. But instead of actually asking for more time, I don't think he wanted more time. To be honest, I think if I could have muted him, it would have helped him out. Because the more he talked, the bigger the fool he made of himself. He kept digging himself into a hole. So I don't think he actually wants to be on the show. He just wants to pretend that he has all these intelligent things to say, yet I just won't let him. Well, the problem is he just doesn't have that stuff to say. The reason that he was on the show, my producer invited him on because he wrote an article critical of my support for the Herman Cain 999 plan. And that article was getting some play online, and so we brought him on to defend his position and argue against me. And, of course, my support, if you want to call it that, for 999 is qualified. And, in fact, my article that he was referencing is actually being critical of the 999 plan for the fourth nine. But anyway, his main critique against me was that I thought we'd be better off with a sales tax than an income tax. And he said a sales tax is not a good tax, it's a bad thing. Of course, so is the income tax. My point is that it's not that we have no taxes at all, and I'm arguing that, hey, let's have a sales tax. My point is we already have an income tax that is very destructive. Why don't we get rid of it and have a sales tax instead? Because I think a sales tax does less harm to the economy than an income tax. So I thought we would have that debate, but he refused to have it. I asked him several times, hey, what's better, a sales tax or an income tax? And he couldn't come up with an answer. Basically, all he said is that he didn't like either of the taxes. Well, that's not an option. That's not what the discussion is. The discussion is, given the fact that we have all this government spending and we have to finance it, what's the least disruptive way to do it? Would you rather do it with an income tax or a sales tax? I'd rather do it with a sales tax. Now, of course, all Wenzel did was come up with reasons why the sales tax was bad. Well, but what about the income tax? You have to look at what it's replacing. Now, his main argument was, well, the sales tax actually hurts businesses because it forces them to cut their prices because people can't afford to pay the higher price because of the sales tax, so it ends up being paid by businesses, and so it hurts businesses. Now, that argument is so simplistic. What it ignores is the fact that when you eliminate the income tax, all those so-called customers now have a lot more money to buy the goods, so they can afford to pay the sales tax because they're no longer paying the income tax. So the whole thing is pointless. And what I also thought was interesting is on his blog, there were people that were critical of me saying, I can't believe Peter Schiff is in favor of a sales tax, so that's big government, he's a statist, I expect more from him. We're talking about being in favor of a sales tax that eliminates the income tax. I can't think of a tax that's more oppressive, more disruptive to individual liberties than the income tax. In fact, the only tax I can think of that might be worse is actually the tax that Robert Wenzel really wants to impose. And I want to talk a little bit more about how stupid and idiotic his actual preference is, because that came out later in the interview. So I'm going to talk about that. Stick around. We'll be right back. This is the Peter Schiff Show on SchiffRadio.com. This is Peter Schiff here at SchiffRadio.com, and was talking about Robert Wenzel's appearance. And, of course, I try to have him back on the show again, but he just accused me of muting him. But in any event, so before the break, I was discussing the fact that he refused to really get into the discussion of whether or not he was in favor of an income tax over a sales tax, because he's condemning me for supporting a sales tax. But by default, then, he would be supporting the income tax because I'm trying to get rid of the income tax. But basically, I think what he tried to say is, really kind of have his cake and eat it too. He doesn't want either tax. He doesn't want an income tax or a sales tax. Well, hey, there are a lot of things that I want that I'm not going to get. That's not on the table. And I said to him, well, we have all this government. How are you going to pay for it? And he got back. He would respond by saying, well, I want a lot less government. Well, me too. That's not the issue. The issue is, given the size of government we have today, what is the way that we should finance it? And what he came up with was, he said he wants a head tax, a tax where the United States government would figure out how many people, how much money it needs to raise, how many people are in the country, divide, and then give everybody a bill. Now, that's called a capitation tax. Now, forget about the legalities of that, which I'm going to get into in a minute. Think about the lunacy of this proposal, right? He's criticizing me for being in favor of a sales tax. Look at the tax he's in favor of. He's in favor of a tax system where Warren Buffett would not just pay a lower rate than his secretary, which, of course, he doesn't do, but Warren Buffett, when he paid 17% tax, he paid like $7 million. His secretary, even though she might have paid a higher rate, theoretically, when you're not counting what Warren Buffett paid as a shareholder of Berkshire Hathaway. But maybe his secretary paid what? Maybe she paid $10,000 in federal taxes. I don't know if that. But under the head tax that Wenzel was talking about, each of them would pay the exact same dollar amount. Maybe it would be $20,000 apiece. So Warren Buffett, the billionaire with $30-40 million a year in income, would pay the exact same tax as his secretary, and not just his secretary, everybody. What about the Amish, that are living off the land? They got to pay their $20,000 apiece. They don't have any money. What about all the homeless people on the street? How are they going to get their $20,000? They don't even have jobs. They're living in a box. How are they going to pay a head tax? What about little babies that are just born? How are they going to pay the tax? Now, maybe Wenzel would say, well, we're not going to count kids. Well, at what age do you count them? Right, because if you count kids, and somebody that has 3 or 4 kids is going to pay 5 times the tax as Warren Buffett if Warren Buffett has no kids. But if he's going to say we're not going to count kids, well, okay, at what age does your obligation to pay the head tax kick in? I mean, I guess the highest you can make it is 18. After all, that's when you're a legal citizen. That's when you can vote. I think if you made it any higher than 18, then it might be age discrimination. I don't know if you can arbitrarily say you only have to pay the tax if you're 30 or 35. I don't know if you can kick it in then. But, of course, the higher we make the age of exemption, the higher the taxes are for everybody else. But let's say, you put the tax in at an 18-year-old. So the minute you graduate high school, you're on the hook for this enormous tax. I mean, the whole thing is preposterous. And think about oppressive. He's talking about a sales tax being oppressive. You can avoid that. You can't avoid this head tax. You have to pay it. And, of course, what happens if you don't pay it? What, do they throw you in jail? I mean, if you're a homeless person, I guess the Amish, they're going to have to give up that whole way of life. They're going to have to start earning some money so they can pay their share of the Robert Wenzel a head tax. But, of course, I also mentioned the unconstitutionality of such a tax. And he doesn't even, and even with the ability to think about it after the fact, he went back and criticized me on his blog, saying I was wrong. I don't know the Constitution. No, Robert is wrong. Not only doesn't he understand basic economics, but he also doesn't understand the U.S. Constitution. Yes, the Constitution says that Congress can levy a capitation tax, but only if it apportions it to the states in a manner that is laid out in the Constitution itself. So how would a constitutional capitation tax be levied? What would happen is we would do a census, and let's say California had 10% of the population. And, of course, it includes everybody. It includes little babies, right? Everybody is included in the census. And if California had 10% of the population, even if a lot of that population disproportionately were little kids, if they had 10% of the population, and if the government wanted to raise, let's say, $2 trillion in this head tax that year, California would be responsible for $200 billion. And so the federal government would send a bill to the state of California and saying, you owe $200 billion for the capitation tax. And it would be up to California to collect it any way it could. And after it collected it, it would remit it to the government. That is the constitutional methodology for levying a direct tax which would include a capitation. The only theoretical exception is the income tax itself, which they amended the Constitution for in 1916, theoretically to get around that requirement. Now, that's a whole other discussion legally, whether or not they actually did or not, but that's the only tax that can avoid this. So the type of tax that Wenzel is talking about clearly would have to be levied according to the original Constitution. The 16th Amendment does not apply. So the type of tax that he was envisioning is indeed unconstitutional. It would require a constitutional amendment. He's wrong again. But, of course, what he's also saying is the Founding Fathers were wrong. See, the Founding Fathers, like me, liked excise taxes. They thought they were the least oppressive way. They didn't like the type of taxation that Robert Wenzel wants. That's why they made it so difficult for the government to levy direct taxes, because they regarded them inherently as oppressive. Yet, apparently, Robert Wenzel thinks the Founding Fathers were all wrong, that the real oppressive taxes are the excise taxes, and that the government should run entirely on the very types of taxes that the Founding Fathers feared most. Anyway, I guess I don't want to beat a dead horse here on this issue, but if you want to hear the actual discussion, go and listen to Friday's show, and if you don't listen on this website, then I will, I am making a YouTube video of the discussion. Anyway, also one more thing, and I got a lot of people on hold, so I'm going to get to the calls, but I want to mention one more thing on taxes, because I'm getting a lot of emails on, again, the Herman Cain 999 plan. People are telling me the corporate tax is being reduced, right, from 35% to 9%. So why isn't that going to offset, people are saying, the sales tax? In fact, Herman Cain is saying that prices aren't going to go up under his plan because he's lowering corporate taxes. And Herman Cain is saying that 35% corporate tax rate is already built into prices. And so if we don't have the taxes, then prices will fall. Again, Herman Cain doesn't understand basic economics. Profits taxes are not passed on to customers in terms of higher prices. They're not. They are paid entirely by the shareholder. And here is why. I'll give you the basic Econ 101 explanation. Corporations, or any business for that matter, always tries to maximize taxes. Maximize profits, not taxes. Maximize their profits. And so they have to price their products at the point where profits are maximized. And of course, obviously, the more you charge for your products, the more money you make, right? If you charge more money, then, you make more for each unit you sell. But the problem is, people are sensitive to price. Demand is a function of price. So as a company raises the price of its products, some customers end up not buying anything. And so even though you get more money from the customers who still buy, you don't get any money from the customers who you priced out of the market. So the markets are going to try to find the optimal price where a corporation can maximize its profits with the most amount of sales at the highest price. That's the price that's there. Now, assuming that that's happening in a situation where there's no corporate income tax at all, you've got a price, let's say the maximum price is $10. That's the price for a particular widget is $10 a piece, and that's where you maximize your profit. What happens if all of a sudden the government introduces a 25% profits tax or a 50% profit tax? How does that affect the market price of that product? Anyway, I'm going to have to answer my own question when we get back for the break, which I will do, and then I will take your questions. So stick around. You're listening to the Peter Schiff Show on SchiffRadio.com. This is Peter Schiff here at SchiffRadio.com, and we are talking Econ 101 on the fact that corporations do not pass on profit taxes to their customers. They are paid by the owners of the company. Anyway, so my point was that companies are trying to maximize their profits. And let's assume that I am selling widgets, and the price that we're selling them at to maximize profits is $10 a widget. Now, let's say the government says, okay, now we're going to have a profits tax. The company's going to have to pay 25% of its profits to the government. How does that new tax affect the $10 price of my widgets? And the answer is it has no impact. The price stays exactly the same, despite the fact that I'm giving 25% of my profits to the government. Now, why is that? Somebody might just say, well, no, I'm going to pass on the tax. I'm going to raise the price of my widgets from $10 a widget to $12.50. Well, if I could raise the price of my widgets to $12.50 and maximize my profits, meaning get more profit, I would have already done it. The price would already be there. It wouldn't matter. I mean, I don't have to have a tax to give me incentive to raise my price. I already want to raise my price. The only reason that I'm not pricing it at $12.50 is because I'll destroy some of the demand and I won't maximize my profits. The profit maximizing price is not changed based on what percentage of the profits I pay in taxes. Think about it this way. If the profit tax is 25%, that means I get to keep 75% of my profits. Well, how would I maximize 75% of my profits? Well, maximizing 75% of your profits is the same as maximizing 100% of your profits, right? Because still, it's 75% of that number. It's still going to be the biggest number I can find. So it doesn't matter. Whatever my tax is, I'm still trying to maximize my profits in the same way, whether or not I get to keep all those profits or whether or not I have to split those profits up with a third party. Now, of course, if the tax is raised high enough on my profits, yes, that might disincentivize me to try to generate those profits in the first place. I might not, work as hard. And of course, if another country is offering a tax rate that is considerably lower, then I might have an incentive to focus my efforts and my earnings in tax jurisdictions that allow me to keep a greater percentage of my profits. And certainly you need to be competitive for that reason, but the tax is not passed on. There are certain taxes that corporations do pass on. One of them is a sales tax. A sales tax is passed on in its entirety to its customers. The payroll tax is passed on in its entirety to workers. And profits taxes are absorbed by the owners of the business. Anyway, hopefully that makes that clear, because I keep getting a lot of emails as people being confused. And some groups of emails keep coming in about my criticism of the Herman Cain 999 plan with the fourth 9, and they're saying, but the payroll tax of 9% is lower than the current payroll tax of 15.3%. I understand that. I understand that it's lower than 15.3%, at least for the people who earn under $105,000. For the higher income earners, it's an increase, okay? But that's okay because the income tax on those people goes down a lot more than the payroll tax goes up. But my point is not that there is not a reduction in the payroll tax for some people. I acknowledge that. My point is that Herman Cain claims that the payroll tax is completely eliminated, that it doesn't exist. And that's not true. It's not completely eliminated. It's there. It's 9%. And that 9% is a huge, huge number when you're trying to figure out what the average person is going to pay under 999 in terms of federal taxes. Because when you realize he's not paying 3 nines, he's paying 4 nines, that is a huge difference. Herman Cain is claiming that the reason, or one of the reasons that 999 is a good deal for so many people is because they eliminate the 15.3% payroll tax. They don't eliminate it. They just reduce it. Anyway, let me take some calls. First up is Herman calling from Queens, New York. Herman, welcome to the show.
Yes, hello, Peter. Can you hear me?
Loud and clear.
All right. I just have 2 quick questions. The first question is there was an article that came out last night out of the Financial Times that was talking about the Treasury considering issuing new debt securities, where pretty much if you buy a 10-year at 4%, it wouldn't just stay at 4%. If interest rates went up, then so did your ability to clip coupons at the higher interest rate and whatnot. So pretty much they would be issuing floating securities. In the article, it talked about how that would, possibly be a disaster for taxpayers. So I wanted to know what you thought about that, as well as you always talk about how, I've heard you say before in the past how these record profits that they say that the corporations are making are really phony profits because interest rates are so low. So I'd like for you to explain that, as well as explain how floating treasuries would work. Thank you.
Well, basically, it would work like an adjustable rate mortgage, like the ones that people have now. You have a mortgage where it's not a fixed payment, where the mortgage will adjust higher if rates go up. And, of course, the benefit of the adjustable rate mortgage is that you get lower payments right now. The trade-off is that down the line, if rates go up, then you're stuck with a higher payment. And so that's the same risk for the U.S. government, although the U.S. government right now is already issuing its own version of that simply by borrowing using T-bills instead of long-term bonds. But I think if the government were to move to issuing longer-term maturities, let's say bonds of 10 years or longer, but with a floating rate rather than a fixed rate, what that would indicate to me is that there is a lessening demand, because obviously the government would prefer, right? Why would you issue a variable rate note when rates are at record lows if you could find somebody to buy the 30-year at the current low rate or the 10-year at the current low rate? You wouldn't do it, because it works to the benefit of the buyer to the detriment of the seller. So the only reason that the government would be contemplating such a move is if there's already problems at the long end, beyond the Federal Reserve or central banks. If the government is finding it difficult to get people to buy its longer-term maturities, the only way they might do that is by saying, well, you're not going to get stuck with these low interest rates for 10 years or 30 years because we'll give you a higher rate if rates go up. Now, what that does is that might help temporarily keep the interest rates lower on these longer-term securities, because now the government is not forced to pay people today for the risk they're bearing of higher rates, because they're not bearing the risk anymore. The risk is being transferred to the government, meaning the U.S. taxpayer. But if they were to do this, this would be a very, very dangerous sign that the government is having trouble selling its bonds, and the only way it can do it is with this sweetener. But all that would mean is that when interest rates go up, the U.S. economy would be clobbered that much worse, because not only would we have to pay higher interest rates as the short-term maturities roll over, but we would be stuck paying higher interest rates even on the bonds that don't mature, because government would have to start paying the holders of the long-term bonds an even higher rate of interest. So if we did this, this would be another desperate attempt at, let's kick the can down the road. We got a huge problem. How can we buy some more time? But, of course, all they're doing is adding fuel on the ultimate fire, because it's just making the U.S. economy that much more vulnerable to rising interest rates. Now, I know I forget what the second question was.
Phony profits. The phony profits, you say, due to low interest rates.
Yeah, well, a lot of companies are able to, big corporations, right, because they have a lot of debt on their balance sheets, and they're able to access the bond market because they have high-quality bonds that are bought. They're able to pay a lot less on their bonds than they would be paying in normal situation, and so their interest expense is lower, and therefore their profits by definition are higher. If interest rates were a lot higher, then corporate profits would come down, because corporations are net payers of interest. Also, a lot of their customers are other big companies, and those companies have more money to spend on the products because they're not spending as much money paying interest to their bondholders. So, once you have a more realistic rate of interest, then the whole situation changes, and, the profits come down. And think about all the companies that are profiting right now just retailing stuff to American consumers who are able to buy the stuff because they have an artificially low mortgage rate, because they've got cheap credit, they can get credit cards. So all these profits come because consumers are getting less. Now, of course, you can look at the offset. Maybe there's also some of the people who are spending less because their CD income is less. So it's not 100%, win to the retailer. A lot of it might depend on what they're retailing, who their customers are, and how much retired people are digging into their principal to survive. Because sometimes if they're getting less income from CDs, one way they could be making up the consumption is simply by spending down their principal. But net, I think that corporate profits are being propped up by the low level of interest rates. And ultimately, when rates rise, those profits are going to be impacted. And not only that, but the way you value a stock, it's the present value of its future income streams by an interest rate. So the higher that interest rates is, the lower the value of that stream of income. So stocks get doubly crushed, because not only does their income fall, but the multiple, right, has to rise. So the price really has to come down. I think ultimately, though, if we get hyperinflation, massive inflation, that does benefit the stockholder, because you basically screw the bondholder and you transfer wealth from the bondholders to the equity holders. Anyway, I think I answered your question and then some. But anyway, we got a lot more coming up. Stick around. This is Peter Schiff. I'll be taking some more calls when we get back here on the Peter Schiff Show at schiffradio.com.
Called up my dad, He said you won the...
Peter Schiff here at schiffradio.com. And before I go right back to the phones, during the break I was thinking a little bit more about this Robert Wenzel head tax. And, one thing I forgot to mention is that in principle I am not against the idea that wealthier people should pay higher taxes, not higher tax rates, but pay more in taxes to support the government proportionally than lower income earners. So if we're going to have an income tax, I want a flat rate income tax. I understand that under a flat rate income tax, somebody with 10 times the income as another person will pay 10 times the tax. I have no problem with that because it's the same rate. What I have a problem with is saying that if you earn more money, you have to pay a higher rate because that's not fair. That's not treating everybody equal. And it also gives people in the lower brackets an incentive to say, hey, raise the taxes on people who are richer than me. I don't think that's fair. I think if people are voting for higher taxes, they should apply to them too. That way they'll be less likely to support programs if they think that they're going to have to pay their share. Even if it's a smaller share, it's the same percentage. Now, it works just as well, I think even better, on a national sales tax because, of course, the rich people, even if they temporarily save and invest some of their money, which is a good thing, ultimately their money is going to be spent. That's why they're earning it. To spend it. And rich people are going to spend a lot more money than poor people, or middle-class people. Look at the extravagant things that the rich have. They had to buy those things. And, of course, under a sales tax, rich people will pay a lot more in sales taxes than poor people. I've got no problem with that. As long as it's the same rate, I think it's fair. And I think people that earn more money should contribute a greater share to support the government. I'm not opposed to that. But under the Robert Wenzel theory, that's not the case. Everybody, regardless of age, regardless of net worth, regardless of income, has to pay the exact same amount to run the country. That, I think, is an absurd position to take. Think about the guy. What if somebody just wants to live in a wood cabin that he builds in the wilderness? He doesn't have any electricity, any sewage. He's just living on his own, off the land, killing and eating what he kills. That's what he wants to do. Why should that person pay any taxes? He's not getting any benefits from society. He's just exercising his rights to do what he wants to do. Under Robert Wenzel's America, that guy would not be able to do that. He would be dragged into the city, kicking and screaming, by the government and forced to work so that he could pay his share of the head tax. And if he didn't do it, I guess we'd have to throw him in prison, some kind of debtor's prison, because how else would we be able to force this guy to pay a tax? I think that is completely oppressive. I think that's about the worst type of government that you can have, that can just force his citizens to pay some arbitrary amount of tax, regardless of their position. But anyway, I don't know why I was thinking about that on the break. Let me go back to the phones. Next up is Eric calling from Yonkers, New York. Eric, you're welcome to the show.
What's up, Pete? First thing I just wanted to say, I'm just going to keep it quick, is that, I've read Kiyosaki, I've read Benjamin Graham, I've read Seth Klarman, and your books really put the nail in the head to, the way to look at the world on investing and stuff. But
thank you.
I know there's a lot of people, listening, so I'm just going to get right to it. And the reason I joined the show is specifically so I can make this call, because nobody believes me. I am of the view that college is a bubble, just like real estate, for 4 reasons. 1, the government guarantees student loans. 2 is because, people keep going so they don't have to pay their student loans back. 3 is because people go to college so they can, stay on their parents' health care. And 4 is because, people, look to get a job they probably won't get. So my question is, involved in real estate, in a college town, you can get a house for like $60,000 to $70,000 that'll generate like $1,000, maybe $1,500 a month in rent, because kids are using their parents' money. So being that I believe that college is a bubble, how should I adjust to my thinking in investing in real estate and that type of thing?
Well, it's a bubble. Well, it's hard to say it's a total bubble now because obviously that bubble has burst. So I don't think that real estate represents a bubble at this point. You certainly don't have the crazy buying of real estate. A lot of people are a lot more sanguine in their outlook for real estate market in the future. That doesn't mean that it means that real estate prices can't be overvalued in some markets just because it's no longer in a speculative mania, which was the case before the bubble burst. But what you've got to do is understand that in most markets we haven't bottomed out yet because the government hasn't let all the air out of the bubble because of all the props, because of the artificially low rates, because the government guarantees, and because really the whole foreclosure process has been bogged down. A lot of banks have not liquidated their foreclosures, so a lot of these properties are not on the market right now. They will be eventually, but they're not right now. So you've got to look at your own situation. Look at the area, compare the rents to what it would cost you to buy the house, and look at the market, and then look at your own circumstances. I mean, if you're just passing through, if you're only going to be there for 3 or 4 years, you would have to anticipate a big enough appreciation in that property to overcome all the costs of buying and selling it and maybe maintaining it during that period of time, which is not that easy to do. It was easy to do when real estate prices went up every year, but if they go sideways or slightly lower, it's very, very difficult to do. So, you got to make these decisions market by market. But in general, I just don't think real estate still is a very good investment. I think there are much better things to do with your money than U.S. real estate. In fact, if you're going to buy real estate, I think you can buy it through in other parts of the world. Obviously, you're not going to just go out and buy a condo or a house in Hong Kong and rent it out. I mean, but you might be able to buy into a publicly traded company that does that. And so I think that would be a better way of doing it in general than just, buying U.S. real estate for an investment.
I was talking about, renting it to the college kids themselves. This way they have their daddy's money. You know what I mean?
All right, so you're talking about being a landlord, not a place not for you to occupy, but you want to buy rental housing, student rental housing. Well, look, again, it depends. I still think that college is a bubble. There's a bubble that hasn't burst yet. So I think when the college bubble bursts, maybe you won't have that steady stream of government money flowing through the students' hands. So that might reduce demand for student housing. So there are a lot of factors that you want to look at.
All right, thanks a lot, Peter.
All right, thank you for the call. But, yeah, in the meantime, the government's going to keep taking the money from workers, giving it to students. So in the short run, renting to students might not be a bad deal, but ultimately it could end up being a big problem if the circumstances change and we're no longer providing those subsidies, which would be a good thing for the economy, but it might not be a good thing for the individual who's in the business of renting houses to students who have a big wad of taxpayer money to spend on rents. Anyway, we've already come to the end of the first hour. Stick around. We've got another full hour of the Peter Schiff Show, including my guest for the final half hour. So stick around. This is Peter Schiff at schiffradio.com, the gold standard in talk. This is Peter Schiff, Hour 2 of the Peter Schiff Show underway now. 855-4-SCHIFF is the number to call to join the show. I did notice that a few bootlegged, videos of my trip down to Zuccotti Park last week have made it up on YouTube. Some people have watched them. In fact, in Barron's, one of the writers, try to remember his name, Gene Epstein wrote a piece mentioning my trip and linking to one of these video blogs. Also, I think the New York Daily News had some coverage of my trip to Zuccotti Park. But the quality of the videos that have emerged thus far on YouTube are not that great. The audio is not good. I did have a mic with me that belonged to Reason TV, and they are in the process of editing a better version with good lighting and good sounds, and it will be up on YouTube, I believe, sometime this week. So keep a lookout for it. Of course, I was there for hours, so they're going to have to edit it because they're not going to put up a 3-hour YouTube video. No one's going to spend that much time, although I'm sure there's some of you out there that would listen to the whole thing. But I think they want to get a video that has a better chance of really making the rounds on YouTube, and it's not going to be a 3-hour video that's going to get a lot of views. So they're going to try to condense it down. I'm not sure if they're going to get it all the way down to 10 minutes. I'm not really sure what their plan is, but they are working on one. Also one more thing I wanted to clarify, just in case somebody wants to jump on me for making the statement, but. On the first hour, I mentioned the different ways businesses pass on income taxes and sales taxes. And I recognize that there is some impact on the profit maximizing price when you put a sales tax on. Because obviously, if you put a 10% sales tax on products, certain people are not going to buy the product anymore. I mean, it's going to price out some of your market. So some of the sales tax is going to end up being absorbed by the business because the net effect is they're going to have less in taxes, less in profits because some of their customers are no longer buying the products based on the fact that the products are now more expensive by the amount of the tax. I understand that, but my point is that tax is passed on to customers, and if in the process of passing it on, profits are somewhat less as a result of having to pay the tax. That's just how it works. It's not the same thing as a profits tax itself that has no impact on the price of the merchandise, and 100% just simply comes from the business owner. But of course, that impact on profits, that was the whole Robert Wenzel argument, that by making products more expensive, that the business is paying the tax. But that looks at it in a vacuum, right? If you're imposing a sales tax at the same time that you are eliminating an income tax, that changes the whole dynamic because now your customers have more money. They're all richer because they have more income. And if they have more money, they can pay more for products than would be the case when they have less money, when so much of it is going to the government. So you can't look at it in isolation. You have to look at it in totality if you're going to try to look at the impact on profitability of a sales tax that replaces an income tax, not one that is simply added on top of an income tax, which is certainly not something that I am arguing for. I am not saying that we should have a sales tax on top of the current income tax with the same rates. I would say, hey, if we could really lower the income tax and then have a sales tax, that would be an improvement. And, of course, in Herman Cain's goal of his plan, if you read on his website, is to eliminate the income tax and the IRS completely and to just go to a sales tax. So his 999 plan, whether it's 9999 or 999, is simply a means to an ends. Whether you agree with the means, you got to agree with the ends. The ends is the complete elimination of the IRS and replacing it with a much simpler, fairer national sales tax. I don't know how anybody can claim to be a civil libertarian, to be a defender of liberty and liberated government, yet favor a heavily progressive income tax with all of the problems. How you could favor that over a simplistic national sales tax. Anyway, let me go back to the phones. Frank, calling from New York. Frank, welcome to the show.
Hi, Peter. Thank you for taking my call.
Thank you.
I just have two questions for you. One, regarding QE, I've heard people like Jim Rogers recently come out and say that they are already engaging in QE because if you look at the increase in the M2 money supply since August, do you buy that argument? Is that correct? Or I haven't seen that show up, or has it shown up in the expansion of the balance sheet?
Yeah, no, it is happening. Remember, at Europe, everybody, QE is printing money. They just came up with a euphemism that doesn't sound bad, because if you said should we create inflation, should we monetize government debt and create inflation, a lot of people would say no, let's not do that. So let's call that quantitative easing, and then there are a lot of people that might be for it. Look, I'm looking at a Bloomberg article in front of me. Headline: China must control prices to curb inflation. I mean, think about that statement. I mean, controlling prices doesn't curb inflation. It just, rising prices are the result of inflation. If they want to curb inflation, they have to stop inflating. China is doing quantitative easing. Where do you think all of their all their reserves are coming from? They are buying up U.S. Treasuries. They're not doing quantitative easing to buy up their own debt like we are. They're doing quantitative easing to buy up our debt. And, of course, the result of all the inflation they're creating is that prices are rising. And it's a big problem in China. But for them to be talking about trying to control prices, that's price controls. Price controls aren't going to work. They didn't work in America under Richard Nixon. They're not going to work in China. The only way to stop prices from rising is to stop inflating the money supply. Stop doing quantitative easing. But everybody's doing it. The world is doing it. And that is why you're seeing prices going up. And, even today, look at what's going on. Oil prices are now up about $2 a barrel. In fact, more than $2.37. We're almost at $90. We're at 89.80 or something like that. Prices are rising because everybody is creating inflation.
So, with that being said, then, do you think that's why? With no real news out of Europe, do you think that's why the market has just been going up 4 weeks in a row straight?
Well, again, I think that reasons that the market is going up is, first, we had a really big sell-off in the market back in August. We had big drops, and in fact, the European markets had their worst quarter in in more than a decade. So in Europe, the decline was bigger than it was in 2008, 2009 on a 3-month basis. So we had a big oversold market. We had a lot of people short, looking for a rerun of 2008. I said that wasn't going to happen. I thought that the downside in the market was limited on the Dow to about 10,000. It only got down to about 10,400. And I think a lot of people got short, and now they're covering, and I think there is QE coming. And, in fact, I think QE3 is coming. One of the reasons we had that sell-off in in August, was because the Fed, threw cold water on the QE bandwagon or fire by coming up with Operation Twist instead. But I think QE3 is coming, and the markets are going to like it. The economy won't, but Wall Street will, and so stocks are rising. Anyway, I'm running out of time for this segment. We can continue if you want to hold on. This is Peter Schiff here at SchiffRadio.com. Welcome back, everybody. This is Peter Schiff here at SchiffRadio.com. The markets continue to move higher now, with the Dow Jones now making new highs of the day, up about 83. But I think the bigger news is what's going on with the commodities that are strong. Gold and silver very strong today. Oil very strong. The dollar continuing now to move lower. In fact, the euro has turned around. It is now positive on the day. The euro now is getting close to 139. It's 138.75. In fact, this is the highest the euro's been since September 8th. In fact, if you look at a daily chart of the euro, you see a pretty good head and shoulders bottom. We have just broken through the neckline, and it would forecast a rally in the euro up to about 148, which would get close to the high point the euro reached in May of this year. That would be a big rally, a big drop in the dollar index. It probably also means, other than saying, we're going to have a big rally in the stock market as well. But if the euro then breaks through that resistance level and we get new record highs in the euro and we're really breaking down the dollar, that could very well be the next crisis. And, of course, I've been talking about the potential dollar crisis for a long time. This has been something that has been looming out there. In fact, I remember in the article that Gene Epstein wrote in Barron's over the weekend, in which he referenced my trip to Occupy Wall Street, there was comments on the article, and one guy tried to impugn and basically said Peter Schiff isn't even intelligent, he's a fool, he's always wrong, and he tried to look at some articles that were written about me in the paper. One of them was he quoted a Business Week magazine story which credited me as having the worst economic prediction of 2005. Of course, if I remember that story, they also gave me the best economic prediction of 2005. So they gave me kudos on one, and they took up, and they made fun of me a little bit for the other. So of course he doesn't mention that I also got one of the best predictions of the year. But what I said was, according to them, quote, I said, quote, the big story of 2005 could be the collapse of the dollar. Because towards the end of 2004, the dollar was at a key level, And I said, well, it could be the big story. I didn't say it would be. So I think Business Week was being a little bit unfair because I never actually said the dollar would collapse in 2005. I simply said that the potential was there, and it didn't happen. Of course, we did have a big decline in the dollar in 2006 and 2007 and 2008. 2005 was the only year the dollar did rally. But also, of course, this particular critic is trying to say, again, he points to the Wall Street Journal article of 2009 that talked about how I made minced meat out of my clients without any mention of, the fact that, A, that article was slanted and biased and happened at a time when everybody, all brokers made, quote, unquote, minced meat out of their clients because the whole market went down in 2008. Everybody who was long lost money, not just my clients, but, of course, they don't want to point out what happened with my clients in the years before 2008 or in the 3 years since 2008, or the fact that obviously the Wall Street Journal was very biased because they refused to write any positive stories about me. And in fact, they refused to even talk to any of my clients who were making money. They only wanted to talk to my clients who were losing money. So it is obviously a skewed sampling. They skewed it deliberately. They told me we don't want to talk to anybody who's doing well. We only want to talk to the people who are losing money. But in any event, I thought that was interesting because, again, I've been saying that there is the potential for a dollar to collapse for a long time. Just because it hasn't happened doesn't mean it's not going to. I mean, that is ultimately the big crash. And people who are not cognizant of the prospect of a dollar collapse, A, don't understand the current dynamics behind the U.S. economy and have no idea how bad things are going to be when that does happen. And as a result, they are not trying to protect themselves from such an event. Believe me, I think protecting yourself from a collapse of the dollar as an investor is the single most important thing that you can do. And even if it means you're doing it years too early, because, I'd rather be years too early than days too late. Because if you're days too late, it doesn't matter. You're too late and you go down with the ship. Anyway, back to the phones. Joe is on hold from Cleveland, Ohio. Joe, welcome to the show.
Hi, Peter. I called on Friday. I mentioned that I believe that you were making a tactical and strategic mistake in asking for the Fed or government to change its behavior. So I called back. Their behavior is not going to change. It's based on coercion, and I think it's time we admitted that. I think it's time we admitted that, there's a huge amount of evidence that's growing every day that behavior is never going to change, and I think we need to change our own tactics. And I think what we need to do instead is to concentrate on growing businesses which are going to work around the Fed and government, like, for example, silver and gold trading for products, such as gold money. And we basically need to admit that this government, it's never going to be fixed. It's going to collapse, and the best we can do now is work towards whatever's going to come next, and I believe that should be, anarcho-capitalism.
Ron Paul running for president, so that would be a step in the right direction if we can elect him and a lot more people like him, but that's a lot easier said than done. Oh, anyway, I lost Joe. Let me grab John calling from Raleigh, North Carolina. John, welcome to the show.
Thank you for taking my call. Hey, I was analyzing your way of taxation, like starting to tax people on purchases, especially the high earners. I was afraid it was going to actually, make retailers more, or actually make people in America want to buy outside of America even more. Like, say you lived in Niagara Falls and you want to buy an iPad. You just go across the border to Canada, buy the iPad, bring it back, forget paying.
Well, but then you're going to pay the sales taxes or the VATs up in Canada. I mean, so all the countries have these taxes, and of course we have a duty. So if you go and buy stuff out of the country and you bring it back in, you have to declare that. I mean, you get a certain exemption, which is pretty low, but then you got to pay the duty when you come back in. So the only way that you avoid paying the taxes in the U.S. is if you buy the merchandise and you just leave it in the country where you buy it. So, yes, if an American wants to have a vacation house in another country and he wants to fill it up with all kinds of products and just leave them there, yes, you're not going to pay any U.S. Sales taxes or value-added taxes, but you're going to pay all the sales taxes and value-added of whatever country it is you are doing the buying. But one thing I agree is I don't think if the U.S. government tried to completely replace all the income tax revenue with a sales tax, I don't think they'd collect it all, because I don't think people would pay these taxes. I think that people would find easier ways to get around the taxes, which is one of the reasons I like it, because I think it would put a limit on the amount of money the government can pay. I think one of the reasons that people don't object to all these taxes is because they don't see them. They're hidden. I mean, people get their payroll taxes. They get their tax. The government takes the money out before they even get a chance to see it. So I think if we had a tax system that was more open, more transparent, if people actually could see the amount of money they were paying in taxes, they wouldn't stand for it. There'd be a revolt. They'd vote in different politicians. And again, I like the Founding Fathers' concept of excise taxes being self-correcting as to abuse. I think that is true. I think there's going to be far more resistance to taxes at the retail level than it is when it's embedded through the payroll taxes and the income taxes, where people just are clueless. You know, you have all this arguments over banks trying to charge an ATM fee. I mean, this is peanuts. We're arguing over nothing. Forget the banks. Look at the enormous amount of taxes that the government, the banks, this is small potatoes that the banks or the cable bills or whatever these guys rail against. The big cost is government. We just have to make sure that it's transparent so that the people know it. Anyway, hey, thanks for your call. Stick around. Timothy Sandifer, my guest, joins us when we get back. You're listening to the Peter Schiff Show here at SchiffRadio.com. This is Peter Schiff here at SchiffRadio.com. Joining the program now is Timothy Sandifer. He is a principal attorney at the Pacific Legal Foundation. He is an adjunct scholar at the Cato Institute. He helps head up the Pacific Legal Foundation's Economic Liberty Project, which protects businesses from abusive government regulations, which must mean he's a very, very busy man. But in addition to that, he is also an author. He wrote the book Cornerstone of Liberty, Property Rights in the 21st Century America, as well as the right to earn a living, economic freedom, and the law. And he's also an adjunct professor of law at McGeorge School of Law in Sacramento, California. Tim, welcome to the show.
Thanks for inviting me.
So as I said, you're probably very busy if your job is to protect people or businesses from abusive government regulation. In fact, I wish you were out of work. I wish we didn't have all those abusive government regulations. But since we have them, I'm glad that there are people like you trying to help poor businesses survive. But do you have any particular examples? I think that would probably be some of the most interesting things you can discuss, is some of the actual caseload that you have and the examples of government abuse.
Well, one case that I'm working on right now actually is in Missouri, where I'm challenging the constitutionality of a law that says if you want to go into the moving business in Missouri, you want to run a moving company, you might think that you could get a truck and get some guys who can lift heavy things, and there you go, just get your business license and start work. But actually, the law in Missouri requires you first to basically get permission from all of the existing moving companies first.
Well, that's pretty convenient.
When you file your application for a license to run your moving company, the Department of Transportation notifies all the existing moving companies and gives them the chance to object. And when they object, you're required to go in front of a board of government bureaucrats and prove to them that there's a public need for a new moving company. And
well, you got to be kidding me. Hold on. Let's back up for a second. First of all, is this federal regulation or state regulation?
This is a state regulation. In fact, it's funny you mention that, because my client, Michael Muni, he's been in the moving business for decades, and he has a federal license that allows him to move people from one place in Missouri to any place anywhere in the United States, and he has a state license that allows him to move people within the city of St. Louis. But he's not allowed to move anybody from St. Louis to elsewhere in Missouri without first getting permission from the existing moving company.
But first of all, I didn't even realize that you need a federal permit. So in order for movers to go across state lines, they need to get a federal permit to be able to do that?
There's a regulation, a federal law that was passed back during the Depression to regulate the moving industry. And although that law was reformed during the Reagan administration and a lot of the regulations were eliminated to open up the market so that people could compete, a lot of the laws still do remain in place. And so, yes. But it's not that hard to get a federal license.
Right. The problem is the state is saying that in order to launch a business, you have to get permission from all your potential competitors who, of course, I mean, if I was in the moving business and the government said, hey, a new guy is thinking of starting a moving business to compete with you, what do you say? Of course I'm going to say no. I mean, why would I want more competitors? As a mover myself, I want to be the only mover. I'd want to be a monopoly if I could, so I can charge as much as possible.
Exactly, and as absurd as this law is, in fact, it's on the books in just about every state. Every major metropolitan area in the country uses a law like this to regulate the taxi cab industry, for instance. But it also applies to a whole variety of other industries. Certificate of need laws even apply to hospitals. And this is really particularly shocking if you think about it. I was talking to some people from Hawaii a while back, and they told me that the island of Maui had only a single hospital on the island of Maui. Now, Maui has a population of something like 30 or 40,000 people, and if you were injured on the island of Maui, let's say you had a car accident on the southern tip of the island of Maui, you would have to endure an hour-and-a-half ride in an ambulance on a single 2-lane highway to get to the nearest emergency room. So some people got together and said, hey, let's have a second hospital instead, and try and provide more health care to people who need it. And because of the certificate of need laws, the government turned them down and refused to allow them to open a second hospital on the grounds that they hadn't proven that there was a public need. Now, of course, what's really going on is that the established hospitals didn't want competition, which means that there has to be somebody out there who was in an accident and died on the way to the emergency room when every second counts, because the first hospital didn't want to allow a free market for competition in the medical industry. It's
of course,
really
I don't understand.
That we allow these laws to stay on the books.
Well, what I don't understand is why you would have to demonstrate to a bureaucrat that there's a need for your product. The fact that you want to provide one means that the market says there's a need for it, because if there was no need for it, there would be no profit in it for you to go into the business. And if you're wrong, let's assume I think there's a need for a certain product, and I produce it, and there is no need, well, then I just go out of business and I lose money. But if I go into business and I'm making a profit, by definition, there was a need for it, because otherwise I wouldn't be able to profit by satisfying a need that didn't exist.
That's exactly right. It comes down to the question of who should decide what products and services are available in the free market. And you have two answers to that. It's either the bureaucrats, either government officials make those decisions, or the consumer makes those decisions. And I think, believing in freedom of choice as I do, that consumers should be allowed to make those decisions. So, for one thing, bureaucrats don't know how to make those decisions. How do you prove that there needs to be a new company of any kind? In the early 1990s, if you had said, America needs a new chain of coffee shops, people would have laughed at you. There's plenty of coffee shops in the 1990s. But it turns out that America really did need a new nationwide chain of coffee shops. And how do we know that? Because Starbucks is so wildly successful. No bureaucrat could have ever predicted that America needed a new chain of coffee shops, and yet we did.
Well, of course, if a bureaucrat could have predicted it, he would have been the one to start Starbucks. But they didn't, because they have no idea.
Pretty soon they'll nationalize the entire coffee industry.
But, and think about, in a time where there's so much unemployment, the fact that somebody can't just get a truck and slap a sign on it and call themselves a mover. I mean, you don't need any special skills. I mean, everybody moves, right? Everybody has had, when I was a college student and I couldn't afford movers, I moved. And when your friends had to move, everybody would pitch in. We'd rent a U-Haul, and we'd all move the furniture. I mean, you don't need any skills. You just need a strong back. Anybody can be a mover. And
exactly.
To say that you can't do it? Huh?
That's a crucial lesson to take from this, is that who needs economic freedom the most? And to me, I think the worst thing that Americans have done to themselves recently is allow themselves to believe that economic freedom is something that big business and evil corporations like, when in fact it's just the reverse. The people who need economic liberty the most are the unskilled members of the working class who need the opportunity to put their skills to use in trying to earn a living for themselves and their families. Evil big corporations, they love to have the government dictating winners and losers in the marketplace because they can afford to play that game. But my client, Michael Muni, he can't afford to persuade the state legislature of Missouri to do his bidding. He has to have a constitution to protect his freedom instead.
And, of course, there are a lot of even middle-class people who move and do it themselves because movers are very expensive. If the government made it easier for people to enter the moving business, then a lot of people who are now moving on their own would end up hiring people, and there would be more overall employment in the moving industry if the government would allow the competition to bring down the price. But because they don't, because they protect the competitors, the prices are higher, and then more people end up giving up a Sunday afternoon to move on their own.
That's something that economists call the Cadillac effect, which is regulation comes into the marketplace, and places and the requirements of getting into the business are set so high that the only businesses that can afford to go into business are the really expensive, high-quality businesses. So that means that if you want to get a Cadillac, you can. But if you want a more moderate-priced product or service, you can't afford it, which means that you resort instead to self-help, or you try and do it yourself, which means that eventually people get injured, people don't know what they're doing. It's a lot of inefficiency, waste, and bad things happen because it's not possible to compete in the middle range of prices or in the lower range of prices. The only businesses that can afford to continue in business are those that have the resources to navigate the regulatory maze.
So now, are you challenging on the state level the law that requires the mover to be able to prove that there's a need for the business? Is that your lawsuit?
Actually, we filed a federal civil rights lawsuit arguing that this law violates the 14th Amendment to the U.S. Constitution, which guarantees your right to liberty along with due process of law, and it guarantees your right to the equal protection of the laws.
You could probably argue, too, that it disproportionately impacts minorities. I'm sure in lower-income communities there are probably a lot more people that would like to just become movers, but they can't because they can't get these licenses.
That is definitely true. And we argue that allowing established companies the opportunity to veto their own competition violates the Constitution's guarantee of equal treatment before the law. Every business should be subjected to the same rules, and it shouldn't be insiders versus outsiders.
Yeah, and also, why do they pick moving companies, though? I mean, are there any other businesses that get to say we don't want competition?
Yes, well, as I mentioned, taxi cabs are very often subject to this, limousines, that sort of thing. But the moving industry thing is kind of a weird, quirky, historical circumstance because these laws actually were invented around 1900, these certificate of necessity laws, in order to regulate railroads. And what happened was when the automobile was invented, the laws also were stressed to apply to automobiles. And then moving companies who at first you would always move something on a railroad, and then it was in these newfangled automobiles. And so these regulations got written into place, and they've been left there all this time, even though nowadays nobody uses railroads really to move themselves from one place to another except maybe big businesses. And automobiles are so much more available than they were back then. Circumstances have changed, but the law has stayed in place.
Well, obviously, there must be a lot of movie companies who are given some pretty good political contributions to those local bureaucrats to keep these arcane laws on the books that never should have been passed in the first place. But anyway, we'll have to continue this topic after this commercial break. You're listening to The Peter Schiff Show here at SchiffRadio.com. Welcome back. This is Peter Schiff here at The Peter Schiff Show, speaking with Timothy Sandifer on his business of protecting American businesses from abusive government regulation. And, of course, at the same time, it's not only protecting business, but protecting consumers, because consumers are the ones that are hurt most by these laws, but also the opportunities for the least fortunate among us, the people who are really trying hard to lift themselves out of poverty and improve their lives. These are the people whose lot in life is the most disproportionately impacted by all these government laws. Anyway, Tim, any other stories other than the moving industry which you thought would be interesting to discuss?
Well, let me follow up the moving industry thing by saying this isn't the first lawsuit that Pacific Legal Foundation has filed to challenge these kinds of laws. A couple of years ago, we filed a similar lawsuit in Oregon where they had the same law on the books, and our client was a college student named Adam Sweet who had started a little moving company to help himself get through college. And I'm glad to say that in that case, after the court refused to throw out our lawsuit, the state backed down and repealed that law. so that now you can go ahead and get a license in Oregon without having to get permission. And in fact, the same thing happened in Missouri when we filed our lawsuit. The legislature tried to pass a bill repealing their law also, and then the governor vetoed that. So we're going to have to go to court to to win that case.
But the whole concept of here's a college kid trying to earn his way through college, maybe rather than borrowing his way through, and he can't do it. I mean, the whole idea that you should have to get a license to work. I mean, people have a right to work.
Exactly.
You know, and there's all kinds of occupations. There's occupational licensing. You know, you need a license to be a florist. You need a license to cut hair. I mean, why do you need licenses for these things? Why can't you just do it?
Well, what happens is established industries want to use the government to make it illegal to compete against them. And this is a constant theme in every area of the law that regulates business, is that established industries shut down their own competition. In Florida, you need a license to practice interior design. That is, if you take money from somebody and in exchange for that give them advice on what color draperies to hang or where they should place a sculpture in their living room to look its best, you have violated the law. You have committed a criminal offense unless you first have the government's permission to do that. And the reason is... I
know the whole thing is ridiculous because, I mean, anybody can give out decorating tips for free, you know, but somehow if you charge for it, you're violating the law. I mean, what is it? So decorating is I guess it's the same as prostitution, right? You can give it away, but you can't sell it. What is the rationale for basically saying that a decorator is the same as a prostitute?
There's an old saying in the law from a famous lawyer of the 17th century who said that laws like this, he said, they're like a man in a rowboat. They look one way, but they row the other. They claim public protection, but they intend private protection. What they do is established businesses say, we need to be a regulated industry to protect the consumer. Against what? Against low prices? Against convenient service? Against quality entrepreneurs going into business to earn a living?
Well, I guess what they're going to say is that, well, if we don't license the decorators, somebody might hire a decorator, and then they might end up with a poorly decorated house. Although you see some of the decorations that the professionals have, and you're like, what the hell was he thinking? So, I mean, there's a lot of crazy decorators.
What they say is because there's a federal lawsuit that's going on right now, and in fact, I filed a brief in this case just last week asking the U.S. Supreme Court to review this case because the 11th Circuit Court of Appeals in Florida held that this law, this regulation of interior designers, is constitutional. And what they say in that case, the established design community says, oh, well, it protects the general public because, there's these zoning regulations and other restrictions on what you're allowed to do with your house. Well, and trained professionals can help you to comply with those laws and make sure you don't violate them. Well, now, wait a minute. So, first of all, if that were the case, why does the law apply to things like what color tablecloths you can put up and what kind of draperies you can put over what windows and so forth, which have nothing to do with protecting the public? And secondly, if that's really what the government is concerned about here, why don't they just enforce it through the existing zoning code? Why have a restriction that required you to spend tens of thousands of dollars and get a college degree before you are allowed to call yourself an interior designer? In California,
I know you
need a license to be a landscape architect. If I take money to tell you where to plant your roses, I can go to jail for that. Why? Because it protects the general public?
And we force people to go to colleges, spend money on degrees, and to incur a bunch of debt to do something they could do without any college education, without borrowing any money. What protects the public from a bad decorator is bad decorators. Most decorators, the way you get a job is a referral. You go to someone's house and you say, gee, I really like how you did this place. Can I have the name of your decorator? I mean, it's a vibrant, competitive market. The more decorators there are, the better they're going to be because the guys that do a bad job, they're not going to get any work. I mean, this whole thing is absurd.
And that's the way it works anyway. I mean, even with the laws in place, that's the way people actually do their business. A lot of time people say to me, well, wait a minute, if we eliminate these restrictions, who's going to protect the consumer? The answer is the consumer protects the consumer, and the consumer already protects the consumer. Before I buy anything, I go on, I look at Consumer Reports, or I go on Amazon.com and check the ratings and see what people have said about the product in question. I mean, everybody does this. You consult your friends. You don't go to a business and say, let me see your government license. And when they show you the government license, you say, oh,
well, this
okay,
is
I'll hire you.
That is the condescending, elitist attitude of the liberal big government mentality, that we're all a bunch of morons, that we're all too stupid to protect ourselves, that the government has to do it. But then, of course, we're smart enough to vote for the right people. I mean, if you would believe the liberals, if we're too dumb to pick a good decorator, we're certainly too dumb to pick our own congressman.
Well, it's not actually, it's funny you say that, because if you think about it, a lot of these restrictions are put in place not by elected officials at all, but by hired government bureaucrats who work for administrative agencies that you aren't allowed to vote for. Because part of the whole progressive movement, and I write about this at more length in my book on the right to earn a living, part of the whole progressive movement was the idea of establishing expert bureaucracies that would regulate the economy and would not be subject to control by democracy. So, in fact, you can't, the progressive movement has made it that you actually don't have any control over most of the lawmakers who govern your lives, because most laws are passed by administrative agencies that you really don't have any control over.
I know, but my whole point is that they tell us that we're too dumb to think for ourselves, yet, hey, everybody should have the right to vote. I mean, if you take it to the logical degree, they think we're all too stupid. They think that they should be the dictators because we're all a bunch of idiots. You know, we can't do anything without government help and government protection. We're so stupid that we're just going to go to a bad decorator, that we're going to hire somebody to do our landscaping that knows nothing about landscaping, and the only thing that stands in between us and a bad lawn is some government bureaucrat who's going to protect us. Anyway, look, hey, Tim, thanks for coming on. I appreciate what you're doing. Again, wish you didn't have to do it, but I'm glad you're doing it nonetheless. Anyway, we're at the end of the program. We'll be back again tomorrow for another 2 hours of the Peter Schiff Show here at SchiffRadio.com, the gold standard in talk radio. Bye for now.